The last portion of Chapter 4 focused on how to correct errors made in the journal and or errors that are made in the ledger account. Perhaps you're saying, I didn't know accountant made error. But we don't make errors that often, but on occasion, an error might be made. Therefore, we need to understand what is the process for correcting errors that we may have made in the journal and our errors we've made in the ledger accounts. Okay? So how we correct the error depends upon when the error was discovered. So is the error contained to just the journal only? Or has the error been posted, meaning the error is in the journal and also in the ledger account? So contingent upon when the error has been discovered, that would determine how we're going to correct the actual error. Okay. So if we find the error before it's been posted, meaning the error is isolated to just the general journal, then we can neatly cross out the incorrect information and type in the correct information. We do not want to erase anything out of the journal because it gives the impression that we're not being honest or that we're trying to hide something. By just crossing the information out, the auditor can see what was there initially and then see that we made an error and we corrected the error. For example, on September 1st, an automobile repair shop purchased some shop equipment for $18,000 in cash. So the question to you is, how would you record this transaction into your general journal? I'm waiting. Okay, so let's see. So to record this transaction, we put the date first. We debit office equipment for $18,000 and we credit the cash account for $18,000. You okay with that? You sure? You positive? Take a closer look. Remember that we purchased shop equipment, but in the journal, you record it as office equipment. Uh-oh, we made an error and we debited the incorrect equipment account. Now the question is, has this transaction been posted? And the answer is no. How do we know it hasn't been posted? Because you do not see any account numbers here in the post reference column. Therefore, the error is isolated. It is just in the journal. The error is not recorded yet into the general ledger account. So because the error is just in the journal, we can neatly cross out the incorrect information and just type in the correct information. So once again, if the error is discovered before it's posted, meaning it's just in the journal, again, we can neatly cross out the incorrect information and just type in the correct data. Now, I hear what you're saying. What if I have a computerized accounting system? That's an excellent question, because when you use computerized accounting software, say such as QuickBooks, once you record the transaction in the journal and then you press the enter key, well, guess what? It is going to post to the ledger accounts automatically. So in a situation where perhaps we have a computerized accounting system, or if it's been posted in the journal and ledger as well, then we have to make what is known as a correcting entry. We do not erase or change the journal entry. We're just going to make a separate journal entry to correct the original error. So remember that initially we debited office equipment when it should have been shop equipment. Okay? So because it's been posted already, at this point, the office equipment account is overstated by $18,000. And the shop equipment account is understated by $18,000. So we have to make a correcting journal entry in order to bring the account balance for both accounts to the accurate amount. So you want to ask yourself, okay, identify which accounts were impacted by the error, indicate if those accounts were overstated and understated, and once you have that information, you're then able to make the correcting entry. Okay? So again, here's the original entry shown on September 1st. We made the error. Now here's the correcting entry made on October 1st when the error was discovered. Notice that we're going to debit shop equipment for $18,000 and we're going to credit office equipment for $18,000. We debit shop equipment because that account was initially understated. We credit office equipment because that account was initially overstated. Whenever you make a correcting entry, you must give an explanation as to why you are making the correcting entry. You want to always reference the original transaction date, which is September 1st, indicate, what took place in the original transaction. That would allow us to know how to make the correction at the end of the accounting year. Okay, so that is going to conclude our video lectures for Chapter 4. So review these video lectures on how to use the General Journal, on how to post to the General Ledger account, understand how to make a correction error, whether it's been posted or if it's not been posted.